is that especially on smaller time frames, you get better entries. Reason being is the spreads are the smallest because there's the most volume on euro. What a spread is basically price you want versus price you get when you're entering. So euro tends to be best. There's the most liquid market, so it's easy to get your shorts or your longs on. Right. So basically that's a daily time frame. What you generally do at start of your week is you'll look at weekly candles. The higher the time frame, the stronger the trend is. Right. So you look at the higher time frame and you see if it's coming into a point of interest where you're expecting a reaction, and that guides your thought process. At the minute on the weekly here, right, there's a short-term bullish trend, and it's been in a bullish trend since roughly when that high got took there. So it's been in a bullish trend since November, if that makes sense. Because this high over here, let's keep fucking escaping here, dickhead. This high over here on the weekly was broken by a full body candle. And what I mean by that is, can you see the candle over there? There's a body on the candle. It's not just a wick. That has been taken by some bodies. And it's been taken again, so there's two eyes. Third eye, what's been took? Fourth eye, that's also been took. So like we're bullish. You get what I mean? And we're moving up like that. There's no other indications really that there's going to be any resistance. There's this is called EMA, so 20, 50, 100. That's called exponential moving average. That's like if you drew a line through average at charts, that's what it'd look like on a 20-week, 50-week, 100-week, or a 200-week. The higher the EMA, the more weight it has. So sometimes you get a bit of a reaction off it. So like for a really crude example here on weekly, it come up, it broke it, it was sort of a bit indecisive around it, went up, went down, back to try it again, and then it moved off. So like though, if you look here, it went up. Can you see that candle there? That's called a doji. That one. You often get reactions off dojis. If you look at like that area there, that doji there, it reacted, it went back up, it reacted off that. And then that's more like I forgot what you call it, like a upside down hammer. Doji. It usually indicates it's due a change in direction. Does that make sense? So on them similar shaped candles, not always, but a lot of the time, there'll be that wick where it comes off, doji there, and then the price went up, come down, it retested more or less it's the body where the body just starts. Can you see on that one? Tested off that. So you're looking at shit like that. You're looking at candlesticks on weekly. You're looking at you can get volume on most charts. Volume's okay, but it's like if there's a pump up in volumes decreasing, it indicates that there's due to be a bit of a pullback. Do you see what I mean?
There's not much money going into it.
Yeah, but like last week, we've got a sort of mini doji here, so there could be a bit of indecision this next week. Do you see what I mean? So you're thinking, right, weekly's indecisive. It's also come up to a relatively like a crudely important level around here. There were a previous low. You're literally just looking at high reaction zones. So it went off that, went up, tried it, went. It's like reacted 3-ish times from around here. Can you see? Low, 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 high, high. See what I mean? So it's likely somewhere around here there might be a bit of a pullback to fill in some of that wick. And then there might be a little pullback and a move off. Or there could be a little bit of fucking about sideways, up, down, and then off. Do you see what I mean? So 1 or 2, it's like it could be a bit of a sideways week, is what I'm saying to you. So we'd start on weekly first. You look at your euro. You think, right, weekly. There were a big pump last week. There's an it's called mitigated. It's an unmitigated wick. Some of this down here has not been touched again. There's a lot of this is called imbalance. And a lot of times imbalance will come down and get filled. Not always. You're just looking at likely areas where price might be glued to by looking at previous price action. There, that's called an order block. So there's all these different types of structure and things what you can be looking at. So like we're within that. So this could be this is one of the reasons why it could be a reaction. You don't know, do you see what I mean? But you're building a picture. If it's not there, it'll likely react from somewhere around here. There's a bit of an order block there. That there were a movement caused by that breaking boom that caused imbalance. So when you're looking at these things, these areas, there's a wick there, and straight after it, there were a loader imbalance. So there's a big magnet there when it's done its thing, and there could be something up here where it could be drawn to. So you just look at like these higher time frame areas where price could be moving to, if that sort of makes sense. Then what you can do, if you've got trading view like a decent one, you can look at your weekly, and then you can look at your daily. Oh, no, fuck, I'm on here on GU fucking 15. I don't know if it'd be the same one. FXC. No, crypto. USDT. Euro. USD. FXC. Yeah. Make sure you're not saying one. And that stuff from charts will come across. Right, so now I can look at a daily or a 24-hour. I want daily, same shit. More or less. So I can look at like what's been on before. This didn't age well. I was put fucking silly shit on. It's not calibrated for some fucking reason. It's a different fucking anyway. Right. So there's some settings on here where I've got to like mirror stuff across. I'll get rid of the drawings. So I've got a different indicator on. There's these indicators what like tell you like main highs and lows and previous weekly low and daily low and things. Can you see when I'm on here? How it's like sort of moving across to the other one, if that makes sense. Can you see where price action is? Yeah. So like there were lows where that body started. That what previous weekly low, I think. That what previous weekly high. So there's a range in there. It's moving off here. So these are the type of things, and then that what this week. So looking on the shorter time frame, that wick there, what's not been filled. Something what causes a movement off, breaks a high, and is a sell to buy, would be called an order block. So on the shorter time frame, on the daily time frame, this thing in here, that's called an engulfed candle. I'll put this in a different colour so you can sort of see the type of things I'd be looking at. So I'm looking at that low. I'm looking at some imbalance as well in here. Like usually, if it has trouble here and it's coming back somewhere, there'll at least be a reaction from there on a daily. Where if you're trading in like intraday, like within the day, you only need to find a reaction zone. That's literally it. So like reaction zones I'd be looking at is there's a doji in here and a wick, what's not been touched. So this thing in here could be a reaction zone as an order block. If it doesn't do that, it might just fill in some. So if price happens to come down first to reload to come back up higher or just react from it, I'd be looking at these couple of areas. And literally all you're trying to do here is like build up a picture. So price could fuck about, it could come there and then do that. Or it could come down, do that, bounce off, eventually fucking fuck that off, clear some imbalance up, which is there, then move. Or it could do that, melt, silly, and then it could start his big move off there over a couple of days. You see what I mean? So you're building that picture up. And like when that's just on the shorter time frame. If it wants to break these, it'll probably be going for like the next weekly area. You see what I mean? If it breaks the daily zones, the daily big order blocks, or these daily lows, that's called a swing low. That's called a swing high. That's a swing high. It's like rough swings, swing. It's where it's playing ping pong off. You get what I mean? So the high there, that's just been beat. Oh, beat that a bit high. You can categorize them how you want, but like generally when one gets broken, you're looking at next or next, or you're looking at something on weekly where it might go, which could be anywhere down here, and then you match your time frames up. So like on a daily as well, like this could be valid. If it breaks all that shit, it could be going to fill this imbalance or a bit of that in there. Anyway, so they're where you'd buy from, and then but anywhere from now we could be expecting a reversal because we're in one of these zones. Does that make sense? So we're in this big yellow weekly zone. But on a daily time frame, it could be playing ping pong from some of these, and we only need a bit of remove, and we could make fucking 20, 50%. We could make a big amount of money. So I'll clear a bit of that. I'm just going to erase on it. And then we'll drill down. So then usually you'll go to a 4 hour because you're going to get 6 lots of information in one day if you use 4 hour candles. And that'll give you even more information. So if I break that down, and now I'll zoom in and I'll do a 4 hour. We're looking at these rough areas. It'd be nice if we fucking linked up properly. It's all different. But I'll just look at where prices. So somewhere in here, there's a range and an expansion. So a range is hidden orders, usually. It's broke that previous high. It's broke it. People are expecting some selling, right? So what looks like has happened. The people who sold, expecting it to react from like roughly this range or this high, have been took the fuck out. They thought it were going lower here, but look at it. Can you see that wick? And then it's moved off. So that's trapped in retail sellers, and then the banks and big boys have fucked it off up. But there's been a bit of fuckery this week. When there's big wicks like that, it's just wicks play tricks. They're just wicks are basically people who've just been fucking took out of market. So anyway, but you can see areas where price might want to react from. Again, there's like these high likelihood areas. So if I look on this, yeah, there's this high that's turned into a low. That is called resistance turned into support, quote unquote, which a lot of retail people will look at. That is. So we're expecting that from that weekly thing. We're in a weekly possible sell zone, which is bigger than the daily buy. So if we're looking at this 4 hour, what we're looking for is character or significant structure to start to get broken. So like for a couple of days bear trend to start, which is a downwards trend, you'd expect this to get took. If that got took, you'd then look for a retracement to continue down. That'd be the most likely scenario because you're in this sell zone. What usually happens, and that's where I usually get in. That's the model. The character's changed. It's obvious. It retraces back in to pick up any more orders, what were missed, and then it'll move. Or that gets people expecting buys again to get them in, so big boys can get the sells and like getting more positions. They'd usually double and keep adding to positions. So if I were looking at this, I'd be like, fucking hell, sideways range. If it went sideways for fucking ages, generally what you do is, this is how you play a range. If you want to trade, generally I don't fuck about, but if you wanted to, that's the low, that's the high, right? That's the 50%. You take a short from the top 10, 20%, and you take a long from the bottom 10, 20%. So if you were going to play this range here, you could short somewhere here and you cover the high and you'd be aiming for the range low. Or if it went down and you're expecting it to go sideways for a bit, and you can play fucking ping pong. Sometimes you can get in 2 positions and you can put your stop loss at break even. So one of your positions is probably going to win. And you get like a risk-free bet. You're in long and short at the same time. So what I'd be looking for here is in the range, list low especially, getting took because that has caused the high, what took that out. So that's significant, and it caused a load of buying. So there's some orders stacked in here. You just high reaction zones. Or if it starts to fuck off down, I'd then look for a continuation on a smaller time frame. So what you generally do from a 4 hour, although I'll be going over your head here, generally look at an hour or a 15-minute. If you're going lower than 15 minutes, I'd only use it for entering on. at a market order. Or, so I'm looking at this here. So like literally at start of week, there could literally be a fucking short on straight away. It's at the bottom of that range. Looking at this candle here, it's a doji. It's not actually broke that low, so it's not really in my rules. But if I was trying to take a trade, there'd be a 50-50 chance you get a short on and you'd probably take that low out, or you come back into here if it were going to do well, like with that range rule, what we just said. So literally, if I saw something starting to change on a smaller time frame here, I might get in on a short and even just target this low or that low. That's what I might be looking at. But I won't. It's just if I really wanted the fucking trade, I could probably get a couple of percent in the trade. Lowest one I'd look on is a 15, and then you could probably enter on 5. So again, all it is at minute, like my mentor, he's just texting a sort of Telegram group and says, look, it's a lot of indecision at market at a minute. I'm holding off till there's a clear change in direction. Because if this 4 hour starts to take this low here, usually you wait for like a 1 hour or a 4 hour thing to like lows to get taken and there be an obvious direction. So like when selling starts, it fucking starts. When buying starts, it fucking starts. So you're much better going along with the trend on the higher time frame than you are going against. So like if this just did it and went fuck off that, and then it come back up, that'd be a more likely trade than just guessing that it's going to go down here in first place, because it could come up, take that high again, and then fuck about and then do that. See what I mean? It could take this, get a load of people out, and then aggressively move to downside. So at the minute, there's no real clear path to trade. And that's because obviously we're only in January and everyone's been off for Christmas. So it takes like a month or two just to really get money back into markets. So that you'd look at euro, that'd be like a good example to get in a trade. If you wanted more opportunities to get more trades, you could look at maybe 3 to 5 markets. And generally, we look at Euro USD, Great British Pound USD, Aussie dollar pairs. If it's not a dollar pair, it's a bit more. It's like a lot of them are called exotic pairs. They just move a bit fucking erratic sometimes. So what it means is there'll be big zigzaggy fucking moves, and it's hard to get like nice clean trades in with nice structure. It's all wiki and fucking mad. If you can play it and you're happy, like having a fucking heart attack when you're 40, like, do you know what I mean? Play them, but like they're a bit fucking wild. So what we can look at now is we're expecting euro could be in a sell zone potentially, and euro's like the biggest market over the dollar. So if we're looking at that, we can look at the dollar index. That's called the Dixie. Right, so Dixie looks like it's doing fucking sideways shit as well. So there's not really like any clear intention of the market. So if we click on Dixie and we look at weekly, see what we think it might do on week, get rid of that shit. Yeah. So on weekly, it's coming into a previous low here. Right. So what we pretty much do this week to get a highest probability trade, can you see how there's a low, what caused the high, what caused the move off? Yeah, it took this whatever zone I were looking at ages ago from fucking whenever. I was looking at some Fibonacci shit as well, or whatever the fuck I was doing, I don't know. Anyway, none of that really transpired. So I'm looking at this here. We were due a pullback, which this may be the pullback, using this RSI. It's called Relative Strength Index. So as there's been higher highs made, the RSI, the strength, has been getting weaker. On the weekly now, it's dipped below 50%. So it could be coming back up here for a retrace. Can you see that 50% there? A lot of times I have a look for divergence, or I look for it bing-bonging off the 50 when the trend's changed. Sometimes even trend lines on this RSI, like a retest. Shit like this week. I'm not blow your fucking head too much. That you're just trying to have as many reasons to take a fucking trade as you can, but you don't know yet how it's going to react. You probably want to watch the beginning of the week because it's Monday, while Tuesday, Wednesday, or Thursday, really, it's Tuesday, Wednesday, Thursday, your main trades usually happen. Not always, do you know what I mean? Sometimes it's late on a fucking Friday before it closes, it's a big move. But I'd be looking at that and thinking, right, previous zone, it could be coming up here to continue. You usually look before the big move is made. It'll usually take something out. So some people call it like a Judas swing or whatever like that. So what I mean by that is, can you see on the smaller time frame here, before you expect a big line, there's normally an aggressive move other way, which is fake. So there were a high here or a low there. So that's the indecision. Orders getting stacked in. It then looked like it was going to rally back up. But as you can see there, it didn't. That fucker were a wick. So before the big move actually made, can you see that imbalance? Imbalance is an unfilled candle. So can you see to the left here? There's that wick there and there. There's nothing really touching it. So like that whole area there is called a fair value gap or imbalance. So usually you look for a point of interest, what has come up and wick something out. So this is a powerful area. There'll probably be a reaction from there again at some point in future, is what I'm saying. So it's come down here, took out that low, it's took a low out. There was a swing up, it took that high out, that took that low out there. It caused loads of imbalance and it changed the trend. This is powerful. So there's reasons to believe that this also did something similar. That led to the move up here, which took a load of this shit out. We could think the dollar index here could be showing a bit of indecision of it next week, and it could be pumping up to fill that in, that imbalance, or probably coming to something like that and then fuck off down, which means if the US dollar goes down, nearly everything else in market pumps. Yeah. So like if US dollars dropping, so like say for example this low here gets taken out, there's these EMAs. You look at like the next point where it might react from. There's not really any obvious fucking point here. So you could look at like a trend line. I don't know, like there's diagonal ones, and then there's horizontal stuff. The horizontal stuff usually takes more precedent over the diagonal stuff. Reason being, people draw diagonals inaccurately or all in different ways, and it's a lot of retail people who do it, so they don't move market as much. But the banks, they work on these big order blocks and they stack orders in. So the trade are a lot different to us. Like they don't do technical analysis like this. They look at like massive order flow and they've got all sorts of other shit they probably look at. But we're trying to like piggyback and look for like the big boys' clues, what they've left. So this week there's a 50-50 chance, because we don't know yet, that dollar could go sideways and pump, or it could fuck about for a week or two. And if it broke that level, like that might be the next level down there. What we're looking at. Something like that, or like this diagonal thing, or like this previous high. So you can see how that were a last high, and then they reacted from that, and they reacted from that. So if that gets broken, there's not a great deal else what you'd be looking at thinking, yeah, maybe react from there. Maybe something on this diagonal, depending on how you draw it. Like that'd be diagonal support. These EMAs might be support. There's not really much else what looks really all that significant. Like this is significant because it's like a big swing low. But you're looking at like significant structure on higher time frames and seeing where you are in relation to that. So if that breaks, it could really fucking melt for a bit relatively, and all the other things in the market could start to fucking pump up. You see what I mean? So you're thinking in a couple of weeks, if that breaks, I'm looking at getting some fucking longs in, and there'll be a really, really obvious structure. So like Bitcoin props up crypto market, and this is not weekly, and you can see that Bitcoin now is starting to get some fucking life back in it. It's just been dribbling fucking down since it peaked out that 69k. It did that high, and then that it's like a double top basically. It didn't actually take that out by much with a body, barely. And then that broke, and you're looking for places where it might react from. So pretty much like there's a previous 2020. There a previous high fucking somewhere over here at 20 odd fucking K. Don't seem to be there. It's on Binance. Anyway, there were a previous high about around here at 20-ish K. Anyway, so we're expecting now crypto looks like it's taking a bit of a short-term reversal. So are stocks, so are a couple of other things. So can you see how there's a strong buy? And then this week's closing now. You always look on it's good to look on a Sunday because you see that the weekly candle, how it's going to close. So you get a flavour of what the next week could be coming. So it's good to look at how the weekly candle changes. So for example, if you looked at that week there before that like hammer thing at Wick, you could be thinking, fucking hell, it could be changing direction to downside here. So if you like had that bit of intuition there and you drilled down into it, you looked at Dixie and everything on that day, you're thinking, fucking hell, yeah, it's come down, it's gone below them lows, it's come up, it's struggled. Fucking hell, that'd be a big short. If you got in that, you've got in from 52K to fucking, it's nearly fucking half in price. You see what I mean? If you got in that short with some big leverage, you could make fucking loads. So I'm looking at this at minute. I can't show you my Bybit account on here, but I'm about $1,000 up on a couple of longs at minute on my margin. But we can see that generally we're pumping. There might be a bit of fluff happening here because that thing there led to this low getting took out here eventually. You see what I mean? That was the last swing high. So that could cause a bit of interference. But then your next target might be one of these EMAs here, or it might be this low, or it might be where that bit of fluff was before it moved off. So somewhere in here, Bitcoin could be pumping back up to macro, longer term. Generally, what will happen is before there's another big move down, if there's going to be one, there'll be a fake out or there'll be something what takes a previous high, but is like a wick and it fakes it. So this could come up, fuck about, go like that, and then it could move down. Do you see what I mean? Like that, and that up here is when you're short. Even in this range here, you could short the top of this range, but because it's been bearish for that long, when you're at the end of a trend, it'll usually come and fake you out, take your liquidity to move further down if it's gonna. So, like, you'd be right most of the time. On any one of these given weeks, for past however many weeks, you'd have been a lot more right than wrong shorting. Because it's been fucking melting. But now, a lot of people are thinking, oh, nice one, I'm going to short it. We're in the bear market, all valid. But if you want to do the opposite of what everyone's fucking doing, there's no real reason to just jump in a blind short here. It's probably going to pop out. And like this were a bit of a diagonal thing as well if you looked on the weekly. Show you this on the daily. This is like a breakout pattern. So like we're on daily now. So if you're looking at Bitcoin and shit here. You can see that like the lower high. Or even if you took that fucker out, usually there'll be a bit, on the swings, there's normally a bit of manipulation from a trend line. So sometimes I'll draw a trend line and just fuck off one high, and then the full trend makes sense. And you're like, oh yeah, a load of fuckers got trapped there before it moved down. And you see how we circled that one because that led to that on that other time frame. This is just something I've noticed for crypto. Anyway, so it's going back into that high likelihood reaction zone. So on the shorter time frame, there might be a reaction down. So like on the smaller time frame, like if you looked on the 15 minutes, you could probably get a good short round here, but I don't think it'll hold and start taking out these lows for a little bit now. I think it's going to have to come up here for a couple of weeks, scoop up some more fucking liquidity in orders, play about around here, probably wick everyone the fuck back out, and then before it moves down again if it's gonna. So what I'm saying to you is on this Dixie, it's in a range where that could pump. Can you remember? You remember that Dixie where it was? It was down there in that low. We could be expecting a little pump or a reaction from here, which means Bitcoin could be going down in short term. That's the type of shit you look at. And then if Dixie fucks about, it goes back up. That goes down. Sorry, Bitcoin's going up for a little bit, and then when it hits that low, what we were saying from a bit back, that could then fucking melt it. But usually you'd be looking more at euros and that. And stocks, that US 30, that mirrors it's Dow Jones, that's called. That mirrors a lot of crypto. So, a lot of info there, mate. I've just fucking talked at you. Well, basically, if you were looking at something on Euro at a minute to summarise that, we're in a range, high likelihood reaction zones. DIX is also in a range where there could be a reaction. But in the meantime, you'd be better staying out till there's a bit of a obvious trend change on that 4 hour or that hour. And then you jump in on 15 minutes or 5 minutes and you might hold it for a day or two. And you can just like enter and leave it. So if I were going to enter, it's hard to say because it's not there yet. I might do a video this week, or like if I take a trade to like and put this side by side to actually see what might have happened. So if we're going an hour time frame here, we're looking at Euro. We'll just keep it simple. We'll look at Dixie Bitcoin at Euro. So we're in this fucking range here. So what I'd do then, just like as a practical thing, I'd see what were happening. So I'd put an alert on that high to see if that gets broken, see if it's going to pump first, then dump, which I think could be valid. That's one of my scenarios. Or if I see this low or this low getting taken, so I might put an alert under that low on this 1 hour chart. You see what I mean? So if that goes, you're seeing if price is going to do that or it's going to break out that way, and then it gives you a bit more understanding. You want to play the outsides of the ranges. Potentially, there's a good short there, but there's no other reason that it's in a range and it's at the top of the range and we're in a bit of a weekly zone. Make a wake up in morning, mate. I could go on 15-minute here. And usually when I'm going in on 15-minute, if I see like a low being taken, like this can be valid as well. But like this is more short-term trading. If I see like these lows getting taken here, I could even put an alert on that, so under this. And I could look to get like a tighter short on. So if I saw that get took, right? That one, so price went down here and I saw a reaction, I'd get in a short and I'd probably aim for like the next low. So say it went up there, I could have like a really tight short, and depending what happened on here, I'd drill down even shorter. Tight one on like that. And I might be targeting like this low somewhere down here. I could potentially get a quick trade on there, like a 4.8 to 1. So literally, mate, you're looking at higher time frame structure, seeing where you are. You can look at Dixie and stuff in correspondence with it. At the minute, we're at the top of the range. So shorts could be valid. That'd still be a valid short because you're at top of a higher time frame range. You see a low getting taken with a full body candle. That means a change of character potentially. Or like, some of this getting taken. And then you might want to get you sending on the short. That's what might happen. Or it might do any of that other fucking shit, mate. But basically, it's easier when it's in a trend. You see what I mean? Like at minute, if I were forced to take a trade, that might be one I might take. Or I might be looking at one of these lows here to fucking tag one on. All I'm looking at is like, usually I'll put like a 1 to 5 on, aiming for that. Sometimes it goes a lot further, a lot quicker than you thought, and you're fucking buzzing. Or it doesn't actually move that much, and like you get like a 1 to 2 or like a 3%, you just take it off and you think, I'm just going to wait till there's some good movement. If I had a big account, I wouldn't be dicking about with that. I might take it on my personal account because I might lose 20 quid. Fucking, I might lose 30, 40, 50 quid or something. Do you know what I mean? Like risking a 1% of like a small Forex pot. But for you, I'd look at these higher time frame things and I'd wait for these like 15-minute or these hour changes. If you're looking for like an hour or a 4 hour, you want to see a trend change, then you'd want to then re-enter on the new trend, if that makes sense, in respect to the bigger ones. So what I mean by that is, like these alerts on, you can call them like 4 hour low, 1 hour low, or range high taken or something like that. You could put like 1 hour change of character something like that. And then if that were taken, you might then get your short on. Or if it coming back into an area here and it fucking start changing about, you could get your long on. But it's just in respect to that range. It's called premium and discount pricing as well. So, like, say you're in a massive leg. In retrospect, if you want big trades which take longer term, which is better to trade alongside doing the job, that'd be like your last leg from like 6th of Jan there to like fucking end of Jan, more or less. So you'd want to be taking longs from down here and shorts from up here. That's where your better risk to reward could be, because that trade you get in there on that range could break the range, and you could end up with like a fucking an 8-1. Might take you a few days or a couple of weeks to get that out. You see what I mean? But you've got more. The higher the time frame, you trade the exact same pattern, but you've just got more chance to enter. So you could enter like a bigger time swing trade there, and if you thought it were going to continue down and there was a re-entry on 15-minute, you could get in with a really tight stop on 15. So you get two or three trades on within the same trade. If that makes sense. You add to a position, and that's what a lot of like the good traders and stuff do. But it's better when you're in the trending market. At minute, there's an high likelihood there could be a reaction point from this zone here on a weekly, or it could fuck about and go up there and then fucking melt. But there's at minute we're bullish, but we're at top of the range. So really, there's no to fucking do. You know what I mean? Like, what's significant? You could snag one of them scenarios, what I said, and they'd be valid. But it takes a bit of eye to get in, because this price action there is sloppy as fuck. It's quite messy. Do you know what I mean? There's just a lot of fucking sideways, a lot of zigzag. It's not like when there's nice price action, it'd just be like, you know, fucking nice high, nice low, nice high, nice low. You get what I mean? And you think, oh, bing bong, nice. And like when something changes there, you think, oh, I'll wait for a retrace. Hopefully, in the top, like above the 50% of that last leg, if that makes sense. And you want to get ideally a short in here for best risk to reward. But you might be waiting a month for that entry. And you might be waiting a month and you might tag it on, and then you might get busy or have to go to Asda and then you miss it. And that's trading. Do you get what I mean? Like, if you could take every one what were perfect, you'd be fucking. But it's normally you do your worst trading or you lose after you think something's going to happen and it fucking does, and you've missed it. And you think, fucking hell. Well, sometimes you panic, but you think you're fucking mad. You're like, fuck's sake. And then you want to fumble in and you try and like Frubish it fucking entry in because you're right. But like your risk to reward's gone. Like, it's actually gone. And it doesn't normally give you like re-entry when it fucking starts to move off. And then you take a shit re-entry and you end up being the wick, all the liquidity. And then you're like double mad because you made 2 mistakes in a row. You know what I mean? And you knew better. So you're like, fucking hell. But if you could just be a robot and you took every opportunity what were there, that's what you want to be doing. Hopefully that gives you a little bit of insight. And I'm just trying to put some things together, like what I might be seeing based on. They're not like hard and fast rules what I trade with, but generally, like if I'm entering on a 1 minute or on seconds, I like the 4-hour trend to be obvious. So at the minute we're in the fucking range. There's no obvious trend here. So if 4-hour did that and it was continuing up, and it weren't in a weekly zone, it weren't in a daily zone, I'd be thinking, fucking hell, I'm looking for like a retrace here to get back in long. You get what I mean? So 4 hours bullish, and then I'd wait until there were a retracement. The 15-minute swap back to bullish, because that's what it would look like on a smaller time frame, if that makes sense. So the 4 hours bullish still, because that lower being tacked. The 15-minute has changed back to bullish. I'd want to get in on the retracement on the 1 minute and get the 1 minute, the 4 hour, and the 15 all bullish, and that'll give you like your best likelihood of having a successful trade. Do you know what I mean by that? So if I looked at, well, it's hard to show you because there's no price action there. But like, I'll just find you a low. So like that example of that, where I've just said like that, there's not been a high taken there. But that's like after a bit sloppy, but that's like this. It's been bullish for quite a bit. We've said that there's been a high taken there, so we're thinking fucking hell. The trend is still bullish. That this rough area is the last swing low. It's come back into this area there. Can you see?
Yep.
So you'll be thinking fucking hell, licking your lips. You'll be thinking fucking I've been waiting days for this. This would be you licking your lips. You'd be covering that low, something like that, and you'd be expecting that high to get taken. So you've got like a bet, slightly better than a 2-1 if you're really sloppy with it. You see what I mean? Right? You've covered this rough low. Give a tack. Yeah, so 2-1, you're expecting that, but you're expecting that to break, but you might take your profit here. If you left it on, you might have got a 3-1 or whatever here. Right, but let's just say it's that. Right, you go down to a 1 hour. So 4 hour we're aligned. I'm just gonna put like something on it so I can see it. Right. So I go to an hour. Your alert's gone off. You're thinking, fucking hell, it's dropped into my zone here. Right, dropped in. That real like that was like the last little high there. See how it's tricky, and it don't give you like a full body. It'll give you just like a. See that it didn't really get took, but there were a reaction. A sell that got a load of people back in selling because that was just took. You know when I say end of the trend, somebody's looking at a small time trend. Oh damn! They're expecting re-entry down, but on the bigger time frame, the 4 hour or the daily wins the 1 hour.
Yeah.
Right. So can you see on this 1 hour here? Not 1 hour chart. This is a low. Retraced back up. Low. There were a high here. So it's gone down. And that caused a low. So it's like fucking hell, like 3 times on trot. Like, I want to get in again because I'm expecting that. See what I mean? Like that did that. That did that. That come up to a high. That did. Do you see what I mean? You're expecting that. So can you see before the big move off? Can you see that black candle there? That's selling candle. So it got a load of sellers in, and they just got fucking wiped out to upside. So they need to trap them last sellers in on the end of the trend to fucking motor off and just take everyone else the fuck out. You see what I mean? So like the 4 hour trend and the daily trend, we were looking at them last lows over here, weren't we? We want to get some buys in here because we looked at higher time frame first. So when they were expecting lower on smaller time frame, all them fuckers got fucking trapped in and they got took out. So if we were looking on like a 15, which you'll be looking at getting your entries on, right? You would actually see, because we were looking at a 4 hour and a 15. This is where we usually get as entries, right? So we're looking like we're in that bigger zone, right? We're in that area. When that'd be like the last buy to sell. So on you, when this thing here got took out, you'd then look at an entry scenario. So it'd be there. You think, right, where's it going to come back to? Filled in some of that imbalance and fucked off. So what you do is you look at that high and you cover that low because you're expecting, because of that buying thing there took all them fuckers out. Thinking fucking hell, it's reacted. What you could do is you'd enter on something like this. You could have like a limit order on, it's called. So when that took that out, that there, you could look at this, and that thing there is actually called a breaker block, but I'm not going to blow your mind. It didn't actually come back for that wick, but when that got took, bush, that high there were decent. So you could enter back on that and you cover that low there. But you don't forget where you were aiming for in first place, and this is how you get big trades on. So within that big trade, what we said on bigger time frame, we were aiming for top, weren't we? So if you entered on a 15, you got yourself on 1 to 7. I'll send you recording. But yeah, that's what you'd sort of be looking at. So I'd look at that when I'm entering on usually market orders, I'd be looking for like something to like really aggressively buy out of a bigger zone. What I was looking at, this was a big 4-hour daily zone that broke that with strong buy volume. It took some liquidity here before it fucking moved off. So somewhere in this leg, either in imbalance or in here, I want to be looking at getting back in. So I'd have probably ended up back in about there because I'd be a bit impatient, but I cover that low. But my target would still be that 4-hour place. So I'd be looking at like on a 15-minute, I'd be looking at like a 5.8 to 1. You see what I mean? It did eventually get to that. That's how you look at it. You're trying to line up all them time frames. And if you're, I mean, it might even give you a minute. I interrupt minutes and fucking seconds and all sorts of bollocks, me. But like if I were in that zone, you can get what it is. The lower the time frame,
more erratic it is.
Yeah, and the better risk to reward you can get because you get tighter entries. Like you'd enter quicker. Yeah, you could have entered and covered that if you really wanted to. So you might have got a fucking 9 to 1 or something, but I generally I just covered that low because it's easy in hindsight to see what you'd have fucking done.
So does this bit sell, that bit buy?
That's your entry. That's your stop loss.
So if it goes lower than that, it just sells.
Yeah. So you'd work out when you're entering what 1% would be of your pot, and that's how many lots you'd buy or sell. So like with a tight stop loss of, well, that's 41 pips, it's called. You'd put that in something called Stinu, or you'd go on that Vantage FX on your phone, which calculates, and you just put like where you want your stop to be. So you'd put where you want your stop to be. I'll just show you on here. Like as an example. So say you were on Euro, you'd do a buy. That'd be market execution, but you can put in a pending order, so you can put a limit order in. So it means when it hits that price, it'd automatically buy it. Let's go on market. You'd literally do where you're gonna enter, you won't know, but you put your stop loss at like 104.907. So if I entered wherever it fucking price is now with 0.01 lots, my projected loss, if it hit my stop loss, it tells you there. You see it? That's 29 thing. So you literally put where you're going to enter, and that'll go up and down as the market moves. So if you go buy, you roughly want to risk 1%, or on a small account 2% of your pot, and then you would just, if I had like a 100 million fucking pot, like I might be risking, not 100 million, but say I had like a 300 grand pot, I'd buy about one lot-ish, and I'd be roughly looking at that. And I'd risk 1% to 300k, which would be 3k on that trade. So I'm not gonna press fucking buy like it's a live account. But that's what you'd do. So that Vantage FX makes it a lot more easy to do. So that's generally how you'd enter. But if you got like any signals or whatever like that, or you're in some sort of group, they'd usually tell you like where they're expecting like the high to hold and stuff like that, and then you just like engineer your trade based on all parameters what they've said to you. So can you see on that bigger time frame, we were expecting a reaction from then to continue the trend up, and we got a wide positioning at 1 to 2.35, and we got one in at 5.85. So you could risk 0.5% or 1% on each position. And then based on that pumping up, you take it off of that last high, roughly. You could be making 8% within a couple of days.
So then it automatically sell when it gets to that point top.
Yeah, but it's up to you if you want to. You'd put a stop loss on that. Always put a stop loss on. But you take profit is up to you. You can manually take profit, or you can take a bit of profit and a bit of profit and a bit. Like if it got to that area, I might think fucking hell, it still looks bullish as shit. It's just beat that high. So when it's round here, I might sell off 80% of the trade, or I'll just take one position off. So I've been me 2% at least, and I've got 5.85 running. See what I mean? So I've still banked 2. And I might get another entry in here, or I might just let that run a bit and take some out in here and see that it were ranging and like take some out here. And then when it starts to make lows and on next high, I'd maybe take a bit more out. If it didn't beat it, I'd think, yeah, I'd sell around here. It's losing momentum. It's not continuing just to indefinitely just boogie the fuck up. You see what I mean? When it starts to show resistance, I'd be thinking, nah, I'm going to sell most off in this range. And that's what a sideways thing is. It's a range, and it's basically it's a change in hands of orders. Most of the time, 80% of the time, the market's actually going sideways. If you look at that, there's a big fucking move, and it's them you're trying to catch, really. See what I mean? There's these big moves, but most of the time, it's just between 2 fucking points. Like it spends a few days there, even like a week or so, between them 2 points. When you really look at it, and like we're doing the same here, we're in the fucking range. So we want to see something come down here, and maybe we get that, and then it comes back up off there to move again. You see what I mean? So we want to be looking at these points and these points and these points to take trades, because you get better risk to reward and you get better momentum, and you want to line up as many time frames as you can. And that's where you take trades, but that's why you might not take that many. But your mate might have a rule where he looks on every day, and you can look at like 9 o'clock to 10 o'clock. There's normally a big move on the daily. 1 coming up to 1 o'clock to maybe 2 o'clock. There's normally a big move, especially with news. You get these short-term spikes on a daily time frame, and you can see them on this 30. Like there's probably been some fucking news there. You know, when price really just goes a bit fucking mad. Like, so sometimes it's not the best to get in news, because it might fake you out the wrong way. It generally does. It has like a manipulative move one way, like heavy move. 7 morning. Movement started at 9. Well, London open, moved off Bush. 12 o'clock, 1 o'clock, movement down. So a lot of times where there's big moves, you can sort of look at times, and depending on what we're going on that day, there's different opens. So there's like Frankfurt open. The only thing you don't want to trade with Forex is like overnight. Crypto's all right to trade in the evening. Because a lot of it's fueled by there's less money in the market, so it don't take as much money to move it. So a lot of retail people in America will come on at like 1 o'clock, or like our equivalent of like 6 o'clock. Even overnight, like Tokyo or whatever, like there's a big influences in fucking China. They've got fucking most of Bitcoin, we think anyway. So like they can fucking whip you the fuck out overnight. If you're holding trades for multiple days, it's like it's not abnormal to whack up and your stop loss has just been whipped and it's moved the other way every now and again. But like I say, I made a couple of like longer term position trades on crypto on Bybit. I'll send you a video anyway. You can put links into it back. But I'm on a couple of margin trades. This is Bybit's really nice to use.